Hey guys, welcome back to another video. I hope you're having a good week, good start to your week, and surviving out there because personally, I can feel my personal behind getting kicked every single day lately. As usual, every single month, we take a look at the general market. What is happening this month in the market? What changed? Now, if you're new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. So in this video, we're going to take a look at what is happening with diesel prices. What is causing this increase in diesel prices? We're going to talk about the most and least expensive states. We're going to look at the general market. We're going to compare it to the spot market. And we're going to take a look at how the market has changed from 2018, every August from 2018 to 2023. Ready? Let's go. All right, guys, as always, we start by looking at the diesel prices, and this chart is according to, or the numbers in this chart are according to AAA. So what we can see is, unfortunately, from July to August, diesel went up by 47 cents per gallon. I mean, this is terrible. It's actually even higher than in April of 2023. So yeah, according to AAA, we're at $4.31 per gallon average. Now, according to Sonar's diesel truck stop actual price per gallon, which is always a little bit higher, we're actually at $4.33 per gallon. So then we have this chart that we look at each and every Friday, the chart that shows us how diesel prices changed. And since around the 10th of July, right here is when diesel prices started going up. And since the 24th of July, they started kind of skyrocketing into the stratosphere. We know that the price per barrel is going up, and this is because the world's largest exporter has been cutting output. And according to Yahoo Finance, the amount that they are cutting in August is substantial, closer to 3.3 million barrels a day. So this might keep climbing if what they're saying is true. All right, let's move on to the 5 most expensive states and the 5 least expensive states when it comes to diesel. And we'll start with the most expensive. So currently, of course, if we're looking at the price at the pump, the most expensive states are California, Washington, Oregon, Nevada, and New York. But we also have to consider that IFTA tax that you pay when you're filling up at the pump, right? And it's kind of paying money into that IFTA tax bank account. So in order to figure out the real price per gallon, we have to remove this IFTA tax. And if we look at the real price per gallon, now Oregon and Washington kind of switch places. California is still the most expensive, followed by Oregon, Washington, Nevada, and New York. Now let's take a look at the 5 least expensive states. And of course, on the first place, it's Texas. So we have Texas, Mississippi, Louisiana, Missouri, and Oklahoma. But if we consider those IFTA taxes and if we want to look at the real price per gallon, then Louisiana and Missouri, they kind of switch places, and it's Texas, Mississippi, Missouri, Louisiana, and Oklahoma. So basically, stay away. Try to not refuel in the West Coast, the Northeast, and try to get your fuel in the Midwest and the Southern states. All right, now let's take a look at the market data, and we're going to be looking at the outbound tender volume versus outbound tender rejection. Now we look at this chart every single Friday. The only difference this time is we're looking at the percent change in these two indices compared to last month. So from July 14th to August 14th. And what we can see is that volumes, the blue line, they actually increased by 3.7% since July 14th, whereas rejections increased by 14.9, almost 15% since last month. Now, what is surprising to me, and this might be just a skewed perception, right? I've had a really nasty start to August. It's been really bad. I do not see that being translated to the spot market just yet. That these two things are showing promise. I mean, we can't deny it. They're showing promise, but Again, I don't feel it. Do you guys feel it on the spot market? I know that last week people were commenting that it was the worst week. I feel like August in general has been more of a challenge, but I know for a fact that sometimes my perception of reality is skewed by my experiences, right? Sometimes it's hard for me to remove myself out of my little bubble. So I don't know. For me personally, August has been the most challenging month so far in terms of booking loads. All right, let's move on to more specific data. We'll look at the rejection rates by equipment type, also from July 14th all the way to August 14th. Blue line is flatbed. Flatbed rejections increased by 9.4% compared to July 14th, so month over month. If we look at the pink line, this is the reefer, increased by almost 23%. These are rejection rates. And dry vans increased by 19.2% since last month, month over month, for rejection rates. So again, question to all you spot carriers, because I'm a spot carrier, but we already determined that my perception does get skewed sometimes. Are you guys feeling this? Because maybe what is happening, something that I have realized over the past few weeks is the industry-wide carrier panic. It's really, really terrible because carriers are panicking and just booking whatever they can. So perhaps shippers are starting to pay more for those spot loads, but because carriers are panicking, they're just grabbing whatever and brokers don't have to increase their prices. I don't know. You guys let me know. All right, now that we looked at all of this, as always, I started doing a little montage of the market map that we look at where to go, right? But this includes all equipment types, and we're looking at volumes, the height of an area versus rejections, how blue an area is. And I want to show you how the market changed from July 14th until August 14th, because I know sometimes we feel like we are not seeing any change. So let's take a look. So from what we saw, from my opinion, July was a much more interesting market as a whole than August is. Yes, on the general market, we already saw right here that tender rejections and volumes are going up. However, it looks like the places that have relatively better opportunities are getting more and more scarce in the month of August. So if you're a spot carrier and you are dependent on the load board and what lanes are offered on the load board like we are, right? Then you're kind of at a mercy of a higher power. If God likes you that day, you'll find a good lane. If God is pissed off at you that day, you won't. That's how I feel, at least. The challenge is getting from a good market area to a good market area, right? So most carriers, what they will do is if they're in a decent market, they will book a load to a not so decent market and then try to claw their way out of there. All right, now finally, let's take a look at how the freight market has changed from August 2018 until August 2023. And we're going to be looking at every single year of August from 18 to 23. So here's August 2018. We can see the Midwest and South were the good areas. August 2019. Okay, the South is not so good. It's the Midwest. 2019 was not the best market. August 2020. It's getting better, right? Everywhere there seems to be an increase in volume, rejections galore. Let's take a look at 2021. Wow, look at those rejection rates. So this is why the market was good. And we're going to look at the numbers in just a minute. But this is August 2021. Here's August 2022. There are some places with rejections, but you can see it's getting lighter and lighter. The map, and here is August of 2023. Not much to say about this year's market, right? It's nowhere near as good as the prior years. Now, just as a reminder, we have the volumes, right, that changed, volumes and tender rejection. So I made a chart that looks at every single year the lowest and highest rejection rates and the lowest and highest volumes. So let's take a look. We're going to be looking at the peak volumes and peak rejections. So we can see in terms of volume, August 2021 was on first place. On second place was August 2020. Then it was August 2022, which is surprising. Fourth place, August 2019, August 2018, and on sixth place right here, this is us, August 2023. In terms of rejections, 49% rejection. Half of the freight in the general market was getting rejected. Number two was 2020, 43% rejection, up to 43. 2021, 42%. 2022, 20%. Then we have 2019, 19%. And again, on the last place is us right now. This is our max, 18.97%. Basically, this shows us that certain markets have a tender rejection up to, and this is the highest number, right? So we're on the losing side, both for volumes and for rejections. Here's a little chart, the max volumes and max rejections. We have 18, 19, 20, 21, 22, 23. And we can see that in both charts, we are at the lowest point in volume and in rejection. We're actually pretty close to 2019 in terms of maximum rejection. But yeah, so basically we are having the worst year in 5 years. So it's not surprising that rates are currently unsurvivable, right? Especially if you pair that with the increase in capacity. The least amount of volume, the most amount of capacity, plus inflation, plus the high diesel prices. Well, guys, this is a formula for exactly the crap storm that we find ourselves in today. Now, remember how I said that I don't feel like the general trend in August, the fact that everything's increasing in terms of rejections and volumes, I don't see them translating to the spot market. Well, here's a chart all the way to right now. Actually, this chart is 1 week behind, but this is the truck stop posted rate per mile. So basically, they take data from what loads are posted and for what rate for equipment types, right? For what equipment types. So we can see that the blue, this is the flatbed 7-day moving average. Now, the flatbed is going down. I can feel that for sure. But the reefer is the green line. You can see that the reefer has been kind of zigzagging up in terms of the posted rate per mile. So has the dry van. Now, again, this is a question for you guys because I have not been operating dry vans for a long time. And I have not been operating reefers. We just recently started operating it full time. So question for you is, are you seeing this increase by any chance? Because I definitely feel the decrease in the flatbed rates, but reefers and dry vans, I don't have anything to compare it to in the past few months. So please let me know in the comments. I'm actually very, very curious. So yeah, in terms of the indicators that we looked at, except for diesel, of course, they're mostly positive. Volumes are increasing, tender rejections are increasing. But the thing is, personally, I do not see it reflected on the spot market from experience. We did see last week that spot market volumes did increase. So did those rates, posted rates. They also increased. But when I'm actually working off the load board and trying to book loads, all I can see is carrier panic and really bad rates. Now I'm going to theorize here. And this might be just something that's stemming from anger. Maybe it's based in truth. I don't know. You guys let me know. Perhaps there's an increase in volume, but brokers, they would like to keep that carrier panic booking going because that means they can pocket more. So maybe shippers are giving more volume to brokers and brokers are simply not posting that load. So it looks like the market has not enough loads. Carriers start panic booking and brokers end up keeping more in their pocket. Again, this is just a theory. I completely understand that it might stem from anger. It might stem from the shock that I'm getting every time I'm trying to book a load, but you let me know. But you know what? What doesn't kill us, it makes us stronger, right? And those who end up making it through this type of market, which we already determined is the worst in 5 years, we have so many things going against us, right? The volumes are at their lowest in the general freight market. Rejections are at their lowest in the general freight market. Rates are bad. Diesel prices are at their highest. Plus there is inflation, and plus there is the biggest overcapacity in 5 years. So yeah, everything is definitely stacked against us. So if you survive this type of market, you are definitely going to emerge stronger and wiser. Anyway, guys, wishing you a fantastic rest of your week, and I will see you in the next video.